Hi, and welcome to the Market Alert for Monday, the 27th of April 2020. So gold higher, cryptos higher, stocks higher, oil purge as prices start to move higher, as this bit here, as the global economy crashes. So the economy is crashing, which is evident from the lockdown, and yet we managed to see a surge in gold prices, crypto, stock and oil, which I can expect in gold, not a problem at all. But as for stocks and oil, well, it's a different ball game. So let's have a look at Friday's daily chart. You can see the market finding support at the 62% level and moving higher on the overnight. So what I'm going to do here is just to add in a few more fibs so you can see where the market is likely to trade to. So from this high here to this low here, that's what we're going to do. We're going to draw in from the high to this low, and you will see that price is already at the 76% retracement on the overnight. So a close above this, which we're already above the 50 bar moving average, then look for prices to close above 24441. 24,441 is where we're looking for the next upside target in this market. And if we break this, then we head to the 76% retracement we've had here for a few weeks. It's staggering, really, to think that the market is continuing to move higher. But a quick look at Friday's pre-market session, you will see just after 9 a.m. BST that the market moved higher. It broke out 100, 200, 300 points before we got to the opening session. The market traded sideways initially, and then the selling came in, and we see the market trade all the way down to the 200 MA, where prices are tested, and that's what the blue price bar is there. We then get a retracement from this low to this high, right on the 76% retracement. I'll just remove the extend right there so you can see, and there you go. Price is coming down to the 78 and also the 89 there. Prices find support and off we go, and then you'll see all of the buy signals there as the plunge protection team came in, and then once again brought the markets back 100, 200, 300, 350 points before the close of trade. And then overnight prices gapped higher, they then pull back and have since continued to move to the upside, which is what we're seeing here in the daily chart. News for today, well, there is no news today, so the market's free to move to the upside. But there seems to be a complete disconnect in this market as prices move higher. The only thing that's reinforcing this, if I get the right one, is we can see here that the implied volatility, the option sellers are not seeing a lot of risk at the moment, 34.91, the lowest we've had for weeks, and continues to move to the downside. So what's behind the move to the upside? Well, I would say, as I said a few weeks ago about the stock market being pushed higher, certainly as we see a lot of the lockdowns being eased, certainly in the US and in Europe from today and over the next few days as well. You can see there that we've got, just get the drawing tool sorted, Spain ends its lockdown. I noticed also Italy in here. Can't see it for love nor money, but it's in here. There we go. May the 3rd, Italy ends its lockdown. Germany reopens schools on the 4th. Japan state of emergency ends. UK lockdown not, though, for another 3 weeks. France reopens schools. New York, etc. And all of this is going to boost the stock market as the economy starts to get going again. Of course, there's still all of the measures in place, social distancing, etc. But it's enough to boost the stock market a little bit higher. And incredible, really, when you consider that the US debt now stands at, or the national debt is 23 trillion. You can see this has been the case of just pumping money, printing money to keep the illusion alive that everything is fine. This has happened since 2010, where we've seen the debt increase here. We've got the Fed's balance sheet from last week now since March. They have printed 2.4 trillion actually since we went into the crisis. The balance sheet now standing at 6.5 trillion, which is staggering when you look back to 2008 when it was actually under 1 trillion, just 800 billion. So you can see the madness here. Keep doing the same thing over and over again, expecting a different result. Well, they're not going to get it. Jobless claims continue, as we saw earlier on in the week as well. The latter part of last week, and now you can see that we're 26 million, and this week we're also forecast another 3.5 million job losses as well. And like I say, the complete disconnect in this market when you see that crude oil there, we're moving into the end game. Absolutely we are. 27 tankers anchored off California, hundreds off Singapore as oil industry shuts down, and yet the stock market continues to move higher. 2020 oil exporters' income will plunge over 1 trillion, forcing widespread stock liquidations. And the madness continues. But when you can keep printing like this is where the money's going into the stock market, the plunge protection team, and they can't allow the stock market to drop. I've said this for the last 10 years, and that's precisely what we're seeing now as prices are forced back to the upside. And like I say, it's nearly a 76% retracement from this high to this low, where the market really started to fall apart, and probably a 50% retracement, I would have thought, from the high, which is there, down to the low. So I haven't got 50% there. Let me just add in a 50% retracement, but it looks around 50% for the high to the low of the move. There you go. We're just through 50% there, which you can see just nudging through it for the second time. So the madness continues. Just keep printing the money, keep coming up with harebrained schemes. As long as you can keep printing trillions and trillions and adding this to the balance sheet, buying up junk bonds, toxic mortgages and everything else as usual. And it is business as usual. So there you go. That's a quick roundup of where we are. And the markets continue to move higher. Finally, just before finishing, let's have a quick look at this week's economic news. We've got the FOMC this week. No pointers there on interest rates. Tomorrow is only consumer confidence. Thursday, we've got refinancing rate and policy. That's on Thursday. And the criminal's out on Thursday as well. Lagarde, she will be speaking, no doubt via Skype, instead of behind bars where she should have been. And Friday is a French bank holiday, Italian bank holiday. That's good, isn't it? They just start to ease the lockdowns and it's back home for another day. And then you've got ISM manufacturing as well, which will see a drop. Nothing from the UK this week. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.